should be showing. This is a spreadsheet. Now this is a spreadsheet of about 3 years of Apple Computer. If you took every trade in Apple Computer using the system, this is end of day data. That's why these times all show 1600 hours. That's 1600 hours Eastern time when the market closed. Now, if you're trading end of day data, say you're a stock trader or whatever, you're going to get a signal, as I just mentioned, maybe sent to your cell phone, or your broker can get it. If you don't want to trade it and you want him to place the orders, that's fine. But as the trades came through all the way from back in April of 2006, that's almost 3 years. All right, I'm going to go ahead and scroll all the way down here. Just let's look at the results. I'm a little bit pushed for time, but I'm going to hopefully explain this to you where you can see the profits. Now, there. Okay. Again, let me point this out to you. See the trade like on 3/11/2008. You got a buy signal. Let me show you that first. You got a buy signal. There's the price. Okay. Profit target was reached on the 18th. Okay, there's the price. And there's the profit. So all these trades are detailed out. There's profit target 2. That happened on the 24th. There's the price right there. There's the profit for profit target 2 reached, dollar gain. And it goes over here to profit target 3. All right, so you can see how you would do the same thing here. Profit target 3 was met right there for that one. So if it made those profit targets, it's logged. There's 5 ways that we look at the market. I actually liked the Apple one a little bit better, but I mean the ES. But we looked at taking profits, guys, all in, all out at the first profit target. We looked at taking profits all in, all out at the second profit target. Then we went back and looked at all these figures and said, okay, what if we took profits all in, all off, or all in, all out at the third profit target right here. Then we went back and says, okay, what about taking trading multiple positions? In other words, say maybe buying 1,000 shares, whatever, 1 share, 2 shares, working it out that way, where you take close off some of your shares at the first profit target, some of it the second profit target, and then finally using what we call a 2-contract method, where you'll close half your positions or 1 contract at the first profit target, and then just hold the other one open until that trailing stop gets taken out. Okay. If you guys are typing anything, I'm not going to hear it because I have the speakers turned down. So anything that you type or questions you ask, if I don't physically look at the screen to see that you're asking that question, I'm not going to know that you asked the question. When I'm looking at my charts and describing things, I can't be looking at the screen that you're asking questions on. So cut me a little bit of slack in here. But I'll be glad to answer your questions. But just be patient with me here. So you can see trading Apple here. I've got multiple monitors, by the way, guys. So I'm looking over here at my third monitor right now. All on off the first profit target. Trading Apple Computer. Look at the profit target 1, or look at the profit that was gained at profit target 1. $63.50 a share. Now this is a stock, so we're looking at share prices here. All right. All on, all off, trading for almost 3 years, you came out winning with the system, taking every trade 100% mechanically. $63.50 a share is what you would have made over that period of time. Man, that's a winning system by anybody's book, I would think, if you can come out ahead over the way the market's been moving the last 3 years. Now, look what happens if you took all your shares on or off at the first profit target. I mean, the second profit target, excuse me, not the first, but the second profit target. Your gain jumped up almost by half. It went up to $91.03 a share. If you held for the third profit target, this is an Apple Computer, if you held for the third profit target and then closed everything out at the third profit target, look at your profit per share, $148.13. That is an amazing amount of money, in my opinion. Fantastic. Is it a profitable system? Absolutely. Now, what if you started, say, trading with half on? You traded multiples, I should say, closing half at the first profit target, half at the second profit target. Look at your profit target here. Essentially, you're adding profit target 1 and profit target 2 together, but that's $154.53 a share. Now, this is Apple Computer. Okay, you could use any other stock you want, but as an example, this is one we paid somebody to put together for us. Using the 2-contract method, trading stocks, closing half of your positions at the first profit target and everything else when the trailing stop got taken out in Apple Computer, $300 per share. Now, this is over about a 3-year period of time. Everybody should be happy with that. Goodness gracious. This up here is fantastic, 63.50, but 5 times as much down here using the 2 contract method. Now let me show you something else. Somebody specifically asked about the S&P. Let's take a look at it. All right. We had somebody come in, and one of our traders come in and take every single trade. They documented every single trade over the last 4 months. That would be September, from the 1st of September through the end of the year. It would be December 31st. All right. You can see this is every single trade. Maybe when a trade came in, here's the time it came in, of course the day. The profit target was 1 was reached. There's the price. Profit target 2 is reached. There's the price. Profit target 3, etc., etc., etc. Over here, there's the dollars gained on the first profit target, and if it made the second profit target, it'd be a second profit target over here. There's the gain. Okay, it goes all the way out to the third profit target over here as well. All right, so we've got every single trade documented here, and if I was to scroll through this, just look over here to the left. There's a ton of them. Now, it's going to be so many, I'm not going to sit here and keep hitting this down button. What I'm going to do is just jump down to the bottom of the spreadsheet, okay? And then let you take a look at it right here. There. Total number of trades. There were 1,680 trades taken. Again, what we did, let's don't get confused here, follow me. What we did, out of those 1,680 trades, we looked at every possible instance of taking all your profits out. This is with 1 contract now in the Emini S & P, 1 contract. Closing that contract off at the first profit target. All right, when you reach first profit target, boom, that's it. You're out of the trade. You would have made $16,300. 1 contract. Now imagine what that would be like when you're up to trading 10 contracts. That's $163,000 for some of you guys. Now you're starting off with 1 contract. Okay, we're being very conservative here. Very, very conservative. Second way we looked at it was taking all of the profits off at the second contract. In other words, come in with 1 contract, shoot for profit target 2. Profit target 2 is reached. We're out of the market. That value jumps up to $20,000 net profit. 1 contract in the Emini S & P. $20,000. What happens when you're trading 10 contracts doing this? Start thinking, guys. Come on. Now, what are we charging for the software? Duh. Can you see the value? Now, we looked at taking it off at profit target 3. Trading the futures contract, look what happened here. Value dropped off significantly, didn't it? So trying to hold for profit target 3 and closing 1 contract, you gave too much back to the market by the way the market was moving. You only made $7,800 versus $20,000. What do you think you want to start focusing your efforts at? Can trading the Emini S & P be profitable? Absolutely. Let's continue. What if you traded 2 contracts, closed 1 at the first profit target, and then whenever you got the second profit target, you just went ahead and closed that one off as well? How much money would you have made? There it is, $36,300. But essentially, it's the same as up here, $16,300 plus $20,000. But that's how much money you would have made. $36,000, a little over. Now, if you're using the 2 contract money management strategy where you close 1 contract at the first profit target and then hold a second contract open until the trailing stop, that's that blue and red line that jumps through the price bars. If you held until that jumped out, it didn't make as much money. It's still profitable. It's not in the hole. It's not negative. It's not as profitable as this, but it's still in the positive, isn't it? Now remember, this is per contract. So if you did that method, $4,600, almost $4,700 profit. You're trading 10 contracts, you're still making $47,000. It's not a negative number, so it's still a very profitable method. Where do you think you want to focus most of your efforts at? Statistically speaking, right here. Now, guys, this is taking every trade 100% mechanically. Every single trade. These are mechanical trades. When the system says buy, you buy. When the system says sell, you sell. If you reach the first profit target, that's where you're going to sell. If that was your strategy. Profit target 2, profit target 3, whatever it is, you get out. You follow it religiously. Based on 24-hour sessions rolling. Every single trade. All right, this is a mechanical system. There are people out there that say mechanical systems are not profitable. I beg to differ. Statistically speaking here, the data we are compiling here, our system is profitable.